Hey everyone, and welcome back. So someone just handed me Estee Lauder Companies' annual report for fiscal year 2024, and they're looking for the highlights. What are the big takeaways? Where's the company headed? And is there a possibility of a stock re-rating in the future? It's a lot to cover, but that's what we're here for, right?
Yeah, definitely. A really interesting time for Estee Lauder. I mean, they're such a huge player in the beauty world. But this report kind of shows that they're facing some challenges.
Yeah, for sure. I mean, almost everyone knows their brands, right? Estee Lauder, Clinique, so many more. They've been a major force for decades. But the net sales this year, down 2% to $15.608 billion. Not a huge disaster or anything, but definitely a change from the constant growth we usually see from them.
Yeah, and when you dig into the report a little deeper, it's not just a one-time thing either. The report shows some big drops in skincare, makeup, and hair care sales. Fragrances are doing okay, which is interesting, but it's not enough to offset the losses everywhere else.
It really seems like this is all tied to what's happening in China, right? They mentioned lower sales in mainland China specifically. And of course, they hit to the Asia travel retail business.
Yeah, the report makes that connection pretty clear. The China situation is a big deal, especially because that market's been such a growth engine for luxury brands like Estee Lauder for the past few years, really.
Something else that caught my eye, they announced a major restructuring program back in February 2024. Seems like they're trying to streamline everything, cut costs, and unfortunately, that means cutting jobs too. Something like 1,800 to 3,000 positions globally. That's a pretty big change.
It is. And they're expecting some hefty restructuring charges, too, between $500 million and $700 million. So they definitely think those short-term costs are going to be worth it in the long run. Makes you wonder, will investors buy into that, though? Will it actually lead to that stock re-rating you mentioned?
Okay, so let's talk about that re-rating. What would it actually take for Estee Lauder stock to make a big jump?
Well, the success of this restructuring is definitely a big factor. Investors are going to want to see those cost savings actually happen, and if they actually lead to better profits.
So we're talking about real results, not just promises.
For sure. And there's also those strategic shifts they mentioned, especially with Dr. Jart Plus. They're actually pulling it out of travel retail entirely and putting more investment directly into China.
Wait, really? That seems a little counterintuitive, doesn't it? The Chinese market is slowing down, and they're already losing in travel retail.
I know, it's interesting, right? It suggests they're thinking long-term, doubling down on the idea that China will bounce back. But it's definitely a risk, and investors are going to be watching very closely to see how it plays out.
And how are they doing compared to other beauty companies? Are they all facing these same problems, or is Estee Lauder in a particularly tough spot?
The whole prestige beauty market is slowing down, so Estee Lauder isn't alone, but they depend a lot on China and travel retail, which could make them more vulnerable than some of their competitors.
This makes me think about those impairment charges they took for Dr. Jart Plus.
Yeah.
They actually wrote down its goodwill value to 0, plus a trademark impairment charge. That seems like a pretty big deal.
It is. It suggests that Dr. Jart Plus isn't doing as well as they hoped. And those strategic changes we talked about are probably a direct response to that. They're basically admitting that their initial investment didn't quite work out. At least not yet.
Okay, so there's definitely some risk here, but what about the potential upside? What could actually make that stock re-rating happen?
Well, besides the restructuring and the China situation, a few things come to mind. First, they have to show they can still innovate and stay ahead of the trends. The report talks a lot about their high-touch approach to marketing and personalized consumer engagement. That could be a big advantage if they can actually do it well.
And what about all this talk about social impact and sustainability? It takes up a good chunk of the report. Is that just good PR, or can it actually help their bottom line and attract investors?
It's definitely more than just PR these days. Investors, especially younger ones, are looking at companies' ESG factors. So if Estee Lauder can show they're serious about sustainability and social impact, it could attract investors who care about that kind of thing.
That makes sense. But at the end of the day, investors want to see results. Will those initiatives actually lead to better financial performance?
That's the big question, and it's something we're going to need to look into more. We have to go beyond the nice words and see what the data tells us. Are they actually creating value with these initiatives?
Okay, we've covered a lot of ground here. It seems like Estee Lauder is at a crossroads, facing some real challenges, but also making some big changes to adapt. Let's take a quick break to gather our thoughts. Then we'll be back to dive a little deeper into what all this means for you and your investment decisions. Stay tuned.
So let's get back to what we were talking about before. Your question about a possible stock re-rating. Like we said, Estee Lauder is in a kind of tricky spot right now.
Lots of things happening at once. Right? Big changes, a tough market, and those impairment charges are definitely making people wonder what's going on.
Yeah, those charges really show that things haven't gone according to plan, especially with Dr. Jart. Plus, they thought it was going to be a big growth area, but it just hasn't happened that way. So now they're shifting gears, trying something new in China, and betting a lot on that restructuring plan working out.
It's like they're walking a tightrope, trying to balance all these short-term costs and disruptions with this long-term plan. But is that plan even good enough to get investors excited and actually make the stock go up?
That's the key question, right? One thing that stands out to me is all this talk about the high-touch customer experience. They're putting money into personalized marketing online and offline, which could be a smart move in the luxury beauty world.
But isn't that what everyone's trying to do these days?
Yeah.
How can Estee Lauder actually make their approach stand out? What makes them different?
That's a good question. And it's something investors will be watching closely. They'll want to see proof that this high-touch thing is actually working. Is it creating more loyal customers, higher sales, and ultimately better numbers for the company?
They need to show it's more than just a fancy marketing term. And speaking of marketing, their focus on social impact and sustainability is everywhere in this report. It's a big part of their brand image.
It's interesting because those values do seem to resonate with consumers, especially younger people. But how do you actually measure the impact of those initiatives? Does it really lead to stronger brand loyalty and higher profits in the end?
Right, because at the end of the day, investors care about their returns. Doing good is great, but it has to make financial sense too.
Exactly. So for you as an investor, it's important to look beyond the feel-good stuff and see if those initiatives are actually making a difference. Are they bringing in new customers? Can they charge higher prices because of it? Are they doing better than their competitors? Those are the questions to ask.
This all goes back to the bigger picture in the beauty industry. We know the prestige market is slowing down, but are there other trends that could affect Estee Lauder? Good or bad?
Definitely. One thing to think about is the rise of these independent beauty brands. They're often more flexible, more comfortable online, and they can target niche markets really well. That's something Estee Lauder, with its size and structure, needs to pay attention to. They need to stay agile and relevant so they don't get left behind by these smaller companies.
It's like there's this giant ship trying to maneuver around a bunch of speedboats. You have to be careful not to get hit.
Exactly. And how well they do with that restructuring program is going to be really important. Can they streamline things, cut costs, and become more efficient overall? If they can, they'll be in a much better position to compete.
So we've got all these different factors, internal and external. They're restructuring, they're making big bets on China, they're pushing consumer experience and social impact, and they're facing a very competitive landscape. How do we make sense of all this for investors?
That's the million-dollar question, right? I think the key is to look at the data. Look past the headlines and find the numbers that tell the real story. How well are they actually doing? Are they gaining market share? Are their margins improving? Are they hitting their financial targets?
So we're looking for proof that all these initiatives are actually leading to better business results.
Exactly. And it's not just about the numbers either. Pay attention to how they communicate with investors. Are they honest about their challenges? Do they give clear updates on their progress? Do they make you feel confident in their leadership and their vision?
So trust and transparency are important for building that investor confidence, which could eventually lead to that re-rating you're interested in.
Absolutely. And remember, investing is a marathon, not a sprint. Don't just react to what happens in the short term. Take the time to understand the company, its strategies, and its potential for growth over the long haul.
That's a great point. We're all about taking a deep dive here, not just skimming the surface. Let's take a moment to think about everything we've discussed, and then we'll come back with our final takeaways and some questions for you to consider as you do your own research on Estee Lauder. Don't go anywhere. All right, so we're back, ready to wrap up our deep dive into Estee Lauder. We've gone through their annual report, looked at their strategies, and talked about what could affect a stock re-rating. So what does it all mean for you?
Well, investing in a company like Estee Lauder right now, it's not so simple anymore. It's not just a straightforward growth story. There's a lot going on, a lot of moving parts, and honestly, a lot of risk. But there's also potential, especially if they can actually make their plans work.
Exactly. You're right on the money. It's not an easy buy or sell decision. There's so much to think about, and it really comes down to your own investment goals, how much risk you're comfortable with, and whether you believe they can handle all these challenges.
One thing that really stands out to me is their focus on innovation, both with their products and how they connect with customers. That high-touch approach could really set them apart if they can make it personal and make customers feel valued.
But we need to see proof.
Yeah.
Right? It's not enough to just talk about it in a report. We need to see results. Things like customer retention rates, average purchase value, and of course, better sales and profits.
Absolutely. And that's where your own research comes in. You got to go beyond the marketing hype and look at the data. How are their main products doing? Are they gaining or losing market share? Are online sales increasing? Those are the numbers that'll tell the real story.
What about all those social impact and sustainability initiatives? They talk about them a lot. But how do we know if they're actually making a difference?
That's a tough one. And there's no easy answer. Investors are paying more attention to ESG factors these days, but we're still trying to figure out how to measure how much they actually affect a company's bottom line.
So it's not just about feeling good about the company you're investing in. It's about knowing if those initiatives are actually making the business more successful.
Right. And that takes some serious analysis. Look for evidence that their sustainability efforts are saving them money, making things more efficient, or bringing in new customers. Are they getting good press? Are people recognizing the brand more? Are they attracting and keeping good employees? These are the kinds of things to consider.
This whole deep dive has really shown how important it is to look deeper. Dig into the details. Ask the tough questions. It's not enough to just read the headlines or skim through the report. You need to understand the company, its problems, and its potential.
And you got to be honest about the risks. The beauty industry is always changing, and Estee Lauder is up against some real obstacles. The Chinese market is slowing down, competition is getting tougher, and that restructuring program is a big gamble. It could work out great, or it could blow up in their faces.
So to sum it all up, would you say Estee Lauder is a good investment?
I can't tell you that. It depends on your own goals and how much risk you can handle. But I can say this, Estee Lauder is at a turning point. They have a long history, a strong group of brands, and a clear idea of where they want to go. But they also have some big problems to solve.
So it's not a sure thing. It's a company with potential, but you have to be careful and watch how they're doing very closely.
Exactly. And that's what makes investing so interesting, right? You analyze the information, you figure out the risks and rewards, and you make decisions that make sense for you.
Well said. So that wraps up our deep dive into the Estee Lauder companies. We hope this has given you some valuable insights and helped you understand their situation and what the future might hold for them. Remember, knowledge is power. The more you know, the better decisions you can make when it comes to investing.
Best of luck with your investments.
And until next time, keep learning, keep exploring, and keep diving deep.